Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. So what I'm trying to do right now is reduce my risk by going to lower time frames and finding some support levels. See, the biggest support level is at 124 level. So I think with this trade, we're going to go ahead and keep it. You know what I'm going to do? Actually, I'm going to take this level right here, the 124.50, and we're going to move that stop to 124.30. Because, and here's the reason why. If euro sentiment, and what is the sentiment? The feelings that investors are getting about the euro continue to back off. Okay, now this thing dropped down 300 pips today, and now is up 100. Okay, so price would have to move from where it is now in profit, okay, down 100 pips. If price moved down to 124.40, forget it. I'm just going to dump the trade, and then we'll be looking for a new entry, because I still think long term the euro against the yen, the euro against the Aussie, the euro against the pound are going to be strengthening, and I'm looking for opportunities to dips. And remember, we want to buy the dips in an uptrend. This thing's been uptrending very, very strong, so we're looking for those opportunities. So for on this trade, we're going to move our stop to 124.30. I'm trying to reduce risk. Right now we're at 123.80, so we're cutting the risk on this trade in half. Okay, by doing that. So if a trade went against us, we're talking about, for me, it's a 0.5% trade, 0.5% lost. And now on the Aussie yen, which is my favorite pair, always will be. We had the same thing. We've been buying this pair, doing quite well, and let's go to a different time. We didn't have as much of a sell-off on this one. This was just a normal push down on the Aussie, and you can see over the last several days, price has come down to the 9,600 mark a lot. We've sold and bought and sold this thing a few times. I think 3 different times. I think Mirror Trader customers bought it here. We closed up in here, and then Pro Signals direct customers bought it here. We already closed up the trade yesterday. I think part of it closed out this morning. And when it came back to 9,600, I bought it again. Now, the Eurozone news does affect the Aussie yen, and this has to do with a different training we'll get into, but we're talking about whether the environment is a risk-on or risk-off environment. When people are hating the US dollar, the Aussie yen rallies like crazy. This is when people get more into risk, investing into risk, they invest into the Aussie yen. Okay, and so it affected how, if we did have a sharp drawdown today, not drawdown, but push down, that went not too bad, about 100 pips. It wasn't that big of a run. Down into a nice entry at 19600. And we're going to go ahead and keep that trade on as it is. I am going to tighten up that stop a little bit. To, let's see here, below these lows to 95.70. So we're again, now, instead of it being, if you're risking 1% on all your trades, and instead of, if the market, because of the market news was so immense today in the Eurozone, and the reaction was so immense, tomorrow it could continue, and we could see a drop on all 3 of these trades. If you have a 1% risk, you could lose 3%. Well, we're trying to avoid that. If the market is going to continue to drop, this risk less. The Euro USD, I'm going to end up risking 0.75. But the other trades combined would be about 1%. So we're talking about 1.75% instead of 3%. Again, the key is to remove the risk from the trades as fast as possible, and give our trades a chance to what was I trying to say? I lost my train of thought. Anyway, We want to reduce the risk. It makes our losses smaller and our wins bigger. And so this is one of the strategies we're going to be using a lot. Is once a trade starts moving towards us, we're going to start reducing our risk. Okay, like for instance, the euro yen. Okay, now let's take this trade again on a 4-hour chart. This thing already moved 300 pips. It's already moved back up 100. Why would you risk a stop loss that's all the way down in here for it to drop another 200 pips? If the thing starts moving that direction, we should have been long out of that trade. Okay, wait for it to continue to move down so we can find another buy entry at a deeper level. So we're going to cut our losses down. Our stop to a pushed up to a higher level from 123.80 to whatever that number is I just said I was going to do. 124, right above the 12400 mark. So in there. So anyway, that's what we're going to be working on. This video will be right along with the Pro Signals Direct members, and we'll send this out to Mirror Trader customers as well. And we'll talk to you tomorrow. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.